Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. And also, I'd like to give all our viewers the season's greetings and advance Happy New Year wishes as well. But today on KYC, there is an interesting company, but I would like you to guess it first and then I'll give the name. The first guesswork, it's a very large player in the solid waste management industry. Another hint I'm going to give you, they have received a 329 crore rupees order from Thane's municipality, and some days before, its arm received a 1330 crore rupees order from BMC's, which is the Mumbai's municipal corporation. And the company in focus is Antony Waste Handling. The first question, what I want to know about this company is that what are the key order flows coming in, the revenue and the margin guidance for FY27, FY28. What will be the growth rate? Is it a more than 20% odd? That's what the management will ask. And what's the outlook ahead for the orders from the municipalities? They have a large revenue contribution coming from this segment. That exact details I'll get you. The non-municipal revenue segments, that's also going up. How much will it grow up? What will be the revenue profile in some years? And also the emerging areas. This is biomethanation, biomining. These are the new areas where we see a kind of, refuse derivative fuel. This is the place we'll see what's the future holding for Antony Waste. But also, let's give in some more details about the company, what it actually means, the entire setup of the company, the breakup. The first and foremost, this is a very large player and engaged in the business of mechanical power sweeping of roads, which we see generally. If you are there in Mumbai, Thane, you will see a lot of these coming in from this company. Collection and transportation of waste, the entire ecosystem is there of waste collection, waste disposal. The company becomes a major part of this ecosystem. The operation and the maintenance of the integrated waste management facility. That's what when I mentioned integrated waste management facility, that's what it actually comes in. Also, looking at this, its arm recently received a 329 crore order from Thane's municipal corporation, and also almost a 600 to 800 TPD mixed solid waste process plant is there. So that is the key details coming from this order win, and this order book currently stands at a huge amount, 12,500 crore rupees. That's a big amount you can see over there. And this is coming in as the end of September 2025, and likely it's short past the 13,500 crore mark. Order timeline is of 10 odd years. That means you can expect 125 to 130 crores of revenue at an average, because they have 7 to 10 years of kind of agreements in the company. The order of municipal solid waste collection is roughly 1,330 crore rupees. That's on the lower side, but that is a recent order win, which I was pointing out from BMC. But remember, BMC is having elections also. So you might not get a lot of order inflows in the month of January, but after the 15th and 16th January, you will find next 2 to 3 odd months, those announcements also coming in. You must be wondering what's the revenue distribution. I had pointed out earlier while we are guessing the company, 61% of the revenue comes in the collection. The remaining 27% comes in the processing. This is the area which we are looking at, the contracts and other non-municipal revenue segment, where we'll ask the company whether this will increase or not. But of course, collection and processing, they definitely have a big kind of a contribution. But while we move, actually, I would like to point you out what are the key ratings which we have generally in our KYC show. That's what I would like to point it out. There are 8 ratings which you should be following: the income statement, the balance sheet, the cash flow, and the return ratio. That's the first 4 parameters. And after that, shareholding, street cred, valuation, and outlook. Based on these 8 numbers, we will be giving a KYC rating, which will be determining how the company is well positioned right now, or is there some kind of a stress on that. The first one is the income statement. Let's have a look at the metrics, how it actually stands. I've taken last 3 years metrics here. Revenue has largely been stable here. Not a very, high growth model, but a very decent moat when it comes to the overall business profile and the numbers also. EBITDA also, this has been decently growing. It's not very high, but it is stable, and that is something which also some types of investors do like when they look at the financials. Margins, this has been on the higher side, so that's what has gained some brownie points for me. H1 numbers are also somewhat reflective of the growth rates in FY25. The net profit has been decent, 101 odd crore rupees has been made over here. So net for the income statement, for my view, it's going to be a neutral rating when it comes to Antony Waste. Let's look at the balance sheet. We need to get some more clear picture. And lastly, we see the equity value base has actually gone up and the reserves are up. The borrowings, looking at the nature of the business, it's decent. It's nothing to panic if it's even going up from 415 to 473 crores rupees. But the cash and bank balance, that is good. The working capital ratios seem good, and that has gone up from 86 crore to 132 odd crore rupees. Now, whether the company will do a small acquisition or some kind of capital spending or even return something to the shareholders, that is something which we will ask the management. But net, it seems decent to me. So I've given balance sheet also a neutral rating. So we spoke about income statement, we spoke about balance sheet. The third rating parameter is the cash flow segment. That's also very much important. Remember, a lot of cash flows are coming from municipalities. So there is always a threat or a risk, regarding this B2G, or you could say B2 kind of, institution kind of a risk coming in. But company has done well in that case. That was the question I posed, but company has performed actually well. Operating cash flow, that has significantly gone up from 140 crore to 190 odd crore rupees. And the company in which this area company operates, getting the money out from the municipalities, that means the payment cycle has become decent. And these are the numbers we can see. Cash flow to PAT conversion has been really good. That's around 188%. And net, even the net cash flow, that have also significantly gone up as well. That means the company has worked very nicely on its working capital and the cash flows, and because of that, I'll give a strong thumbs up when it comes to the cash flows. Also, let's get in the fourth rating parameter, and that is the rating agencies. The ratings, the return ratios coming in from there. That is where my concern starts coming in. Generally, for these type of business, getting a 15% ROC, ROE actually works in the favor, but after FY22, it has kind of stabilized in FY23 and FY24, but then the downtick has started coming in. It's at 12 for FY25, and it has not actually improved also in the H1 number. So we need to give it some time. But net, the ROC numbers have been disappointing, and the story remains same for ROE also. That's also, we see it was flat for FY23-24, but then there is a pain in FY25 as well, going below the 12% mark. So both the cases, ROC and ROE, is a strong thumbs down for me when it comes to the return ratios. So we spoke about the return ratios also and the cash flows. Very divergent thoughts coming in, but let me get you another criteria, and that's the criteria is of course the shareholding pattern. Shareholding pattern is very stable here, no major changes. Promoters are still holding 46 odd percent. FIs haven't budged a lot from 12% in March 23, that has come down to 11%. But looking at the DIs, that's decent. It's 6%, 7%, and just 5 odd percent. And retail has also been on the higher side. No major trend coming in. So I will give just a neutral rating when it comes to the shareholding pattern. Also, let's see the street cred. That is nothing but the stock price movement. I've taken the short term, medium term, and long term basis for Antony Waste. And let's look at it over the last 6 months. It has been on the negative side. Stock is down 22%. And year-to-date basis also nothing much for the investors. It's down 16%. And generally the small cap, mid cap space did take a big beating. 1 year also we see it's down 15% as well. But to be honest, there is no clarity coming in. There's no positive move. Of course, there was an order flow, news flow which has come in, and stock jumped up because of lower volumes, but it's not sustaining after that as well. And that's where my concern starts coming in. And that's why I have given for street cred for Antony Waste a strong thumbs down. Also, let's move ahead and see the valuations, how they actually pan out. The peak valuation of the company, that stood at 29 times. That's pretty high. But now let's see what's the current 12-month forward P ratio. That is coming in at 19 times. So there is a significant correction from the top. But is actually that's the price? Let's just see the 5-year average to give you the proper picture, and it is at 13 times. That means the 5-year average P is still on the higher side despite a big correction. So there are two different views coming in, and because of that, no matter what the correction has happened this year in valuations, they are favorable, but not in compared to the 5-year averages. That's why I'm giving this a neutral rating when it comes to valuations. But the street actually determines, the most important thing is what's the future ahead, what's the outlook ahead. After a long time, there was no news flow in the stock. Then suddenly the stock comes up with 2 large orders from BMC and Thane, and all the interest starts coming up in this counter. But will this sustain? That's the question. The outlook coming in, they have given it earlier in the con call. revenue of 25% growth coming in the next 3 to 4 odd years. The order outlook post the BMC elections in January, that's where the street will be looking at. The inquiries from different municipalities apart from BMC and Thane, will that also grow, or will that also be a stable industry growth which we had already seen in this counter? So that's the outlook we'll be looking forward to. In the municipal revenue scope, what's the growth looking like? Are they looking at some areas where they want to expand? That is something we'll be looking out for. And there are three emerging areas they have discussed. I would like to point out, one is the biomethanation, another is biomining, and the third one is the refuse derived fuel. So that is where, we will be looking out for, and net on that basis for the outlooks, I would be basically giving this company, you could say, up kind of a neutral rating. But let's just revise most of the parameters, how things have actually panned out. Income statement and balance sheet, company has done decent but neutral, nothing out of the world. Cash flows has been superb in the business in which they are operating. Getting that in, it's a strong thumbs up. Return ratios lower side, not good for the shareholders. Shareholding neutral it has been. Street cred, nothing much for the investors, and there was a small pop on the order flow, but after that the stock corrected. Valuations has been neutral, it's still below the 5-year average and actually corrected more from the peak valuations. And the outlook, they remain decent, but the emerging areas, we need to see the numbers to actually see whether the stock can get a re-rating or not. And on this total basis for the KYC rating, I have given it 3.5 out of 8 totally, on this number. So generally these numbers are slightly towards the lower side, but average numbers coming in for this company right now. All right, so let's move on, and let's just focus on the guest. We are now joined by NG Iyer. He's the CFO at Antony Waste. NG, hi, Sharad here. And first of all, I'd like to ask you about certain questions, Sure. And that question is definitely going to be on your two order flows which have come in. The first one is from the Thane Municipality Corporation, and the second one is from BMC. I would like to know more details about these two orders.
All right. Morning, Sharad. So these two contracts are in line with what we have been talking about in the past. So in BMC, we have been working in 2 wards, and that number of wards is now increasing to 7 wards. So these are clubbed into 2 zones. These are 7-year contracts where we would be executing a value term of around 1,300 crores. The vehicles, the manpower, the maintenance, everything lies in our responsibility. So this is like a normal growth of growth for a collection and transportation contract. From a 2 wards to a 7 wards is what the growth has been in the BMC contract. The second one you're talking about is the pre-processing contract that we got from the Thane Municipal Corporation. So in this is a 10-year contract wherein the capex will be reimbursed completely to the entity after the construction phase is over, and then the operation and maintenance phase starts. So that's a 10-year additional revenue for us. So 68 odd crores will be the capex reimbursed at the end of the construction period, and 330 crores will be the O&M revenue for the company over 10-year period. So these are the two contracts. So increases our footprint, increases our revenue visibility, and this is what Antony Waste does, and we are good in this business.
All right. Mr. Iyer, another important question is the BMC elections. Everybody talks about it, and there is a sensitivity towards your business also. Already you have a very long-term contracts. That's fine. That's fair enough. But the elections are happening in January, and after, say, 2 to 3 odd months, we generally start getting orders after the elected people come in. After 7 years, this is happening, 7 to 8 years. So what's your view on that? Will the order inflows come a bit delayed now from the municipalities, the new ones?
These contracts are already signed. We already got the letter of acceptance. So this is already in the bank. Now, the incremental new contracts could be for setting up a biomethanation projects or the waste to energy projects. That will take at least a couple of months, as you are right. Once the standing committee and all the members are in place, those things will stay up. But given the need of the hour and the recent news flow that's coming from the Bombay High Court, where concerns about pollution, the odor, and everything is getting flagged off, we feel that the BMC electioners will not delay taking decision in this front. So we expect a lot of action to happen over the next 3 to 6 months.
I'd like to just point out, a lot of viewers are there from Mumbai. You have mentioned a very important point, and that is the solid waste management issues which are happening.
Yeah.
Of course, the city also, a lot of places, construction is happening, dust is also there. So is there any kind of, approach has come from the BMC to your company to come out with some solutions or fast track any of these projects?
Yes, so certain areas like odor control that has been flagged off. We are working closely with IIT Bombay to come out with options to kind of control the odor. But you need to understand that these are within the city limits. We get in around 6,200 tons of waste a day. So odor is something that cannot be taken out overnight. But the steps taken, like coming out with misting devices, coming out with covering devices, soil cover, and those measures are in place. These are stopgap arrangements. The long-term solution would be to set up a waste to energy kind of a project, which happens in most of the developed economies, wherein the suspended particles and the odor kind of gets controlled significantly.
Right, Mr. Iyer, I was looking at the cash bank balances. They are swelling up in your company, and we want to actually know, are you going to deploy it in your expansion or give something to the shareholders?
We definitely will be using bulk of it in our expansion plans. As we mentioned in the past, we got two waste to energy projects in Kadapa and Kurnool. So some of the money will be going towards the equity requirement in these two projects. But the board at Antony Waste has been very tuned to what the requirements are. So that is a possibility that the request of dividend can be in the next board meeting that we will be having.
All right, and this dividend will be something like a special dividend which the shareholders can expect?
I don't think we do anything special. I mean, we'll do something which can be consistent and can be sustained over the period of the time. Because Anthony believes in being conservative, and we would like to start something which we can sustain and do over till the life of the project and the life of the company.
All right, consistency is something which Antony Waste stands for, but there is you have given a view for the revenue growth. That's, if I'm not mistaken, 25% growth in the next 3 to 4 years. Will this remain consistent or any chances of upgrading them?
We would definitely like to upgrade them. Let's be practical. I mean, when we came to the public in 2001, our revenue was around 450 odd crores. Today we have a 980 odd crores of revenue. So that's definitely a decent amount of growth in a very difficult industry. We have worked on the performance, we have worked on the operations, we have worked on our cash management businesses, and that has led us to have this kind of A minus rating from a rating agency and have a decent net debt to equity ratio. So this is required for the industry that we work in, which has seen swings in working capital deployment. So we will definitely like to grow faster than 25% CAGR, but 25% is doable, manageable, given the order visibility that we have and the list of clients that we like to work with.
Well, yes, Mr. Iyer, I must say the working capital management for a company which has a lot of revenue coming in from municipality places and seeing that cash flow management is something really commendable. But one more question is there, let's just remove the municipal side, the non-municipal segment revenues roughly around with the annual contracts coming 10 to 12%. Now, currently
Right.
it's very small. Will this
Yeah.
profile change? And if it changes, what are the areas? Please explain us in detail.
Right. So the board is very cognizant of this issue about trying to diversify revenue source from municipality to a non-municipal businesses. So three main factors that has led us to get into that traction is biomethanation or the bio-CNG business that we are exploring. We are looking at waste to energy as a large trunk, which actually exposes us to discom revenues through the Prati scheme, which is bankable. And the third would be increased sale of compost and RDF, which is refuse derived fuel. The last couple of years, we have seen a significant growth and acceptance in the sale of our RDF, which goes to a cement company. So from a meager 22,000 tons, we are now selling close to 1,44,000 tons of RDF to the cement industry, helping them reduce their carbon footprint and also helping us find a ready market for our main source of sale of RDF. Compost sales has been steady. We sold around 28,000 tons, and that is something that we would like to grow. So these are the three main front where we feel revenue from a non-municipal source can be ticked up. We are also looking at getting into a non-recyclable area. We are looking at getting into uh, auto recycling and tire recycling. So these are the two areas which is right now what we will call as the frontier markets for us currently. But that is something that is there in our view, and that is something that we like to do. The revenue pie from a non-municipal revenue, as you correctly said, around 10 to 12%. We like to move it towards a 15 to 20% over the next 3 to 4 years. and consistently try to expand the ROIC in these areas.
Two very big important statements you stated. One is the tire and the auto related recycling. That's a very, very big market. But will there be kind of a, a plan, a capex or a strategy announcement for it? Because this is really big. This is not an experiment. So is there something
Right.
there?
So we will definitely doing it in phases. So we don't expect a significant capex requirement in this area. It won't be more than 50 to 70 odd crores. That is something that we feel is something that we can definitely deploy without kind of endangering our existing profile of activity. But this is a long-term solution for growth for the company and the industry. So it will happen over the next couple of years. It's not going to happen in the next 12 months. It's something that we are definitely working towards, and we would like to come back to you with firmer plans in place.
And kind of a very conservative capital allocation policy is something which I see from my view when I'm studying your company. But any kind of fundraise, because so many new things you spoke about, any fundraise on the anvil next 3 6 months?
Yes, the fundraiser definitely there. We are looking at raising debt and equity if required at the SPV levels, so there won't be any dilution at the holdco for sure. And on the SPV levels, based on the merits, we will see whether the capital can be deployed currently from our operations. As you correctly said, my cash flow from operations are quite handy, and that can be redeployed where I can ensure a future revenue growth. Debt is not a problem for us. Currently, we are, because of our strong credit rating, we are able to get a good rate of borrowing. I mean, our current existing cost of borrowing is around 9.25 to 9.5%. So I think we will be able to raise debt towards these growth avenues at these rates, and we will definitely keep the market and the stakeholders informed about any future plans that we have.
And please do come first to NDTV Profit. But Mr. Iyer, one more important question is existing margin profile, the future areas where you're looking at the margin profile, and the blended margin profile. What we can see in the future? Just give us a range. It doesn't have to be an exact number.
Yeah, yeah. So currently, I mean, if you look at the margin trend for Antony Waste since 2020 to 2025, when the capex phase is going on, the margin swings to around 20 to 21% and goes all the way to 23 odd percent once the projects have been capitalized and put to use. So we have seen that phase happening. So the incremental couple of years going forward, our core line of activity will continue to give us an EBITDA margin of around 22 to 23%. The new ventures that we're looking at, to be honest, I mean, that we will be happy with 18 to 25% kind of an EBITDA margin, because these businesses are new. They will take time to stabilize and grow up. So we are looking at around 18 to 25, but they are not going to be significant revenue and EBITDA drivers. So the blended rate for us would still continue to be in the range of around 21 to 23% for us.
Right. So the blended rate for the future is also 21 to 23%, and the management stays with the commentary on their revenue front as well. But new areas are there. Please watch out for this company on that. Thank you very much, Mr. Iyer, for taking out your time and giving your views for the company and the road ahead. And that's all, folks, for KYC. Keep watching NDTV Profit.